Silver fell to $57.40. 3 days in a row, gold broke below $4,000 for the first time in 7 months. Somewhere, right now, a trading desk is watching numbers turn red, and somewhere else, a young entrepreneur is checking his phone, wondering if he should sell everything he owns. But here's the question nobody is asking. What if this isn't the end of something? What if this is the beginning of something much bigger? Something that has happened before, in 2008, in 2020, and every single time, the same people got destroyed, while a quiet few walked away richer. Which one will you be? Stay until the end, because what happens next will change how you see money forever. Welcome back to the channel, John Age. Before this story begins, a small request. Think of this channel like an old friend who checks on you once a week. An old friend doesn't ask for much. He just asks to be remembered. So if this channel has ever given real value, do it the favor an old man asks of his children. Just show up. Hit subscribe. Not because a video told you to, but because you want to be here next week when the next warning comes. And one more thing before the story begins. Type in the comments, where are you watching this from, right now? What city, what country, what time is it there? Let's see how far this warning travels today. Now, the story. On a quiet Thursday morning, silver dropped to $57.40. It did not fall in one dramatic moment. It fell slowly, over 3 days, like water leaking from a crack no one had noticed. By the time most people checked their phones, the damage was already done. Gold had broken below $4,000 for the first time in 7 months. Silver ETFs across major markets had lost nearly 4% in a single session. Somewhere in India, a fund manager stared at a screen showing red numbers across every metal he managed. He did not panic. He had seen this before. But millions of others did panic. Small investors, business owners, and young entrepreneurs who had recently put their savings into silver and gold watched their portfolios shrink in real time. Group chats filled with the same word over and over again: collapse. News channels used dramatic language. Analysts appeared on television warning of deeper crashes ahead. Fear moved faster than facts. In one office in Mumbai, a young trader named Erez sat frozen at his desk. He had convinced his father to invest a large portion of the family's savings into silver just 2 months earlier. Now, watching the number 57.40 blink on his screen, he felt his stomach tighten. His father had trusted him, and now that trust felt like it was collapsing along with the price. But something strange was happening beneath the surface. While panic spread across trading floors and comment sections, a small group of experienced investors were doing something completely different. They were not selling. They were watching. Quietly. Calmly. Almost as if they knew something the panicking crowd did not. This is the part of the story most people never see. Behind every market crash, there are 2 groups of people. The first group reacts to fear. They sell in panic, lock in their losses, and walk away convinced the system failed them. The second group studies structure. They look past the emotion and ask a simple question: is this a collapse or is this a reset? The difference between those 2 questions has decided fortunes for over a century. Back in Mumbai, Erez's father called him that evening. His voice was calm, but Erez could hear the tension underneath it. "Beta," he said, "should we sell now, before we lose more?" Erez did not answer immediately. He opened his laptop instead. He began looking at the same numbers the professionals were watching. Not the headlines, not the panic, the actual structure behind the price, support levels, resistance levels, the strength of the US dollar, the reason silver was falling faster than gold. Slowly, a different picture began to form, one that had nothing to do with collapse and everything to do with pressure building somewhere else in the system. He realized something that night that would change how he saw money forever. The crowd was reacting to a headline, but the market was responding to a mechanism, and those 2 things were not the same story at all. Across the world, in trading rooms from New York to Singapore, senior analysts were saying the same quiet thing to each other. This drop was not random. It was connected to something much larger, a shift happening in interest rates, in the strength of the dollar, and in the confidence of central banks. Silver was not the story. Silver was the messenger. And messengers, Erez would soon learn, often arrive before the real event begins. That night, he did not sleep. He kept staring at one number on his screen, $57.40, a number that to most people looked like an ending, but to the few who understood what was really happening behind it, it looked like something else entirely. Aries woke up the next morning with the number still burning in his mind, $57.40. He made a decision. Before speaking to his father again, he would find out the truth for himself. He started with the dollar. Everyone kept blaming silver's fall on silver itself, as if the metal had suddenly become worthless overnight. But the deeper he looked, the more he saw a different villain hiding in plain sight. The US dollar was getting stronger, not because the economy was booming, but because markets were betting that interest rates would rise again. And when interest rates rise, money flows toward the dollar, away from metals like silver and gold that pay no interest at all. It was not silver failing. It was money chasing a different promise. Then he found something that made him sit back in his chair. On the same day silver crashed in India, ETFs across the country were being liquidated at a shocking pace. One fund alone dropped nearly 4% in hours. Another followed, then another. It looked like panic. But when Ares studied the pattern closely, it did not look like ordinary investors selling out of fear. It looked coordinated, fast, mechanical, like large positions being unwound all at once, not by scared individuals, but by big money managing risk on a much larger scale. He remembered something his finance professor once said. When the small investor panics, he sells one share. When the big institution panics, he moves markets. Ares began to wonder if what looked like a collapse to the public was actually something else to the professionals, a controlled retreat, not a disaster. That afternoon his phone buzzed. It was a message from an old contact, a man named Rehan, who had worked at a commodities desk in Dubai for over a decade. Ares had not spoken to him in months, but something told him to reply. "Everyone is calling this a crash," Ares typed. "Is it?" Rehan's response came almost instantly, as if he had been waiting for the question. "It depends who you ask. Ask the crowd and they'll tell you the world is ending. Ask the chart and it will tell you something completely different." Rehan sent him a screenshot. A single chart, with numbers Ares had never paid attention to before. RSI 27. Deeply oversold. Rehan explained it simply. When a metal falls this hard, this fast, it does not always mean the fall will continue. Sometimes it means the fall has gone too far, too quickly, and the reaction is close to reversing. Not guaranteed, but close. "This isn't the ending everyone thinks it is," Rehan wrote. "This might just be the market catching its breath before it decides what happens next." Ares felt something shift inside him. Not certainty, not comfort, but curiosity. The kind of curiosity that separates people who follow headlines from people who understand systems. That evening, his father called again. This time, Ares was ready. "Papa," he said carefully, "everyone around us is panicking, but panic is not information. I looked at the numbers myself. This drop is connected to the dollar, to interest rates, to big funds repositioning, not because silver has become worthless." There was a long silence on the phone. Then his father asked a question that surprised him. "Then why does it feel so dangerous?" Ares did not have a perfect answer yet, but he understood something important now. Something dangerous was indeed happening in the global economy, just not the thing everyone assumed. The real danger was not silver falling to $57.40. The real danger was a much bigger machine grinding into motion behind it, one connected to central banks, borrowing costs, and decisions being made in rooms far away from any trading screen. And whatever that machine decided to do next, silver was only the first sign of it. Far away, in a private office overlooking the Dubai skyline, Rehan closed his laptop and stared out the window. He had seen this pattern before, twice. And both times, what followed surprised almost everyone who had been screaming "collapse" the loudest. He picked up his phone and typed one more message to Ares. "Watch the dollar this week, not silver. The dollar will tell you what silver is about to do." Ares stared at the message for a long time before setting his phone down. Something bigger was coming. He could feel it. 3 days passed. Ares kept his promise. Every morning, before checking silver, he checked the dollar first. On the first day, the dollar index climbed higher. Silver dipped slightly, then held. On the second day, the dollar paused. Silver did nothing dramatic, just drifted sideways, like a boxer catching his breath between rounds. On the third day, something changed. The dollar index opened strong, climbed for 2 hours, and then, without warning, reversed. It fell back sharply. Adez watched the screen, remembering Rayhan's words. Watch the dollar. The dollar will tell you what silver is about to do. Silver did not crash further that day. It held near $57.40, then slowly began to rise. Not much, just a few cents at first. But Adez noticed something else. The intensity of the selling had disappeared. The panic that had defined the last week had gone quiet. He called Rayhan immediately. "It's stabilizing," Erez said. "Silver isn't falling anymore." "I know," Rayhan replied calmly, "but that's not the interesting part." Erez frowned. "What do you mean?" Rayhan explained something Erez had not considered. The real story was never just about silver's price. It was about what silver's behavior revealed about the wider financial system. When metals fall this hard and then stabilize this quickly, it usually means one of two things is happening behind the scenes. Either central banks are signaling they will slow down their aggressive plans, or big institutional money has finished repositioning and is now waiting for the next move. Either way, Rayhan said, this tells us something about credit, about borrowing, about how expensive money is about to become for businesses everywhere. Silver is just the thermometer. The fever is somewhere else. This hit Erez harder than he expected. He was not just an investor. He ran a small trading and import business with his father. If credit was about to tighten, if borrowing was about to get more expensive, this was not just about metals in a portfolio. This was about inventory financing, supplier payments, expansion plans they had been quietly discussing for months. He suddenly understood why serious investors reacted so differently from the panicked crowd. The crowd asked, "Did I lose money today?" The professionals asked, "What does this tell me about tomorrow?" That night, Erez sat with his father again, but this time the conversation was different. He was not defending a decision. He was explaining a discovery. "Papa, I think we've been asking the wrong question," he said. "We kept asking if silver would recover, but the real question is what this drop tells us about where money is heading next. If this really is a reset and not a collapse, it means the smart money isn't running away. It's repositioning, waiting." His father listened closely, something he had not done in days. "And if you're right," he asked, "what happens then?" Erez hesitated. He had an answer, but it felt heavier than he expected to say out loud. "Then the people who panicked and sold everything this week will have made the worst decision of their financial lives, and the people who understood the mechanism, they'll be positioned exactly where they need to be, right before the next move happens." There was a long pause. Then his father said something Erez would remember for a long time. "Then we don't sell. We watch, like you did." 2 nights later, Rayhan sent one final message before going quiet for the weekend. It was short, almost like a warning wrapped inside a compliment. "You're seeing it now. Most people never do. But be careful. Understanding the mechanism is only half the battle. The real test comes when the market gives you 2 paths at once, and you have to choose the right one without knowing for certain which one it is." Erez stared at those words for a long time. 2 paths. He did not yet know what they were. But somewhere deep in his gut, he understood one thing clearly. Whatever decision came next, it would not just affect his portfolio. It would define everything that came after. The following Monday, silver opened at $58.90. A small move, but to Erez, it felt enormous. He sat at his desk before sunrise, watching the number climb slowly, then hesitate, then climb again. His father stood behind him, coffee in hand, saying nothing, just watching his son read the market the way he used to read balance sheets, carefully, without emotion. Then Rayhan's message arrived, right on schedule. 2 paths, he wrote. Remember them? Erez remembered. He had spent the weekend studying exactly what Rayhan meant. The first path was continuation. The dollar strengthens further, silver breaks below its recent low, and the fall resumes, dragging weaker hands out of the market before any real recovery begins. The second path was stabilization. The dollar stalls, momentum shifts, and silver slowly reclaims the ground it lost, rewarding the people who stayed calm. "I see them," Erez typed back. But how do I know which one is coming? Rayhan's reply took a few minutes. When it came, it was longer than usual. You don't know for certain. Nobody does. Not the analysts on television, not the fund managers in Dubai, not the central bankers themselves. What separates people who survive these moments from people who get destroyed by them isn't prediction. It's discipline. It's the ability to separate what you're feeling from what the structure is actually telling you. Erez read the message twice. Something about it felt bigger than silver, bigger than metals, bigger than any single trade. That afternoon, something unexpected happened. News broke that a major central bank had signaled it might pause its aggressive rate plans, citing concerns about slowing global growth. The dollar, which had been climbing for days, suddenly dropped, and silver, sitting quietly at $58.90, jumped sharply higher within minutes. Erez watched the screen in silence. This was the twist nobody in the panicked crowd had prepared for. The same people who had sold everything in fear just 1 week earlier, convinced silver was collapsing towards zero, were now watching it recover in front of them, this time from the outside, with no position left to benefit from it. His father finally spoke. So it was a reset, not a collapse. This time, Erez said carefully, but that's not really the lesson, Papa. His father raised an eyebrow, waiting. The lesson is that most people will always mistake pressure for permanence, Erez said. They see a number fall for 3 days and assume it will fall forever. They see fear in the headlines and mistake it for fact. But underneath every crash, there's a mechanism. Interest rates, currency strength, big money repositioning. Most people never look underneath. They just react. His father was quiet for a long moment. Then he asked one final question, the kind of question that only comes from someone who has lived through more than one financial storm. And next time? What happens when it's not a reset? What happens when it really is a collapse? Erez did not answer immediately. He thought of Rayhan's words, of the RSI reading, of the dollar index, of every quiet signal that had told the real story while the headlines screamed something else entirely. Then the same rules apply, he finally said. We watch the structure, not the noise, because one day the structure will warn us before the headlines do. And on that day, the difference between watching and reacting will decide everything. Outside, the Mumbai skyline had begun to light up as evening settled in. Somewhere in Dubai, Rayhan closed his laptop, satisfied that another person had learned to see what most never would. Somewhere else, in trading rooms and boardrooms across the world, the same quiet questions were being asked by people who understood that markets rarely announce their true intentions. They only hint at them, briefly, for those paying close enough attention. Silver had fallen to $57.40. It had recovered. But the real story was never about the metal. It was about who was watching closely enough to see the warning, and who would still be watching, calmly, the next time the numbers turned red.